Have you ever wondered, should you invest in individual stocks or just put your money in an index fund and chill? Well, today, let's break it down simply, without the jargon. First, let's talk about individual stocks. When you buy a single stock, you're basically saying, I believe this company will grow faster than the market. If you're right, you can make a lot of money. But if you're wrong, you can lose big. Picking the right stock takes research, time, and discipline. You have to study the company, understand its business model, check the financials, and keep an eye on the market. Even professionals struggle to beat the overall market consistently. That's why Warren Buffett once said, most investors would be better off in a low-cost index fund. So, what's an index fund? It's a basket of the biggest companies like Apple, Microsoft, Google, Amazon, all in one package. When you buy an index fund, you're basically buying a small piece of hundreds of great companies at once. You don't have to pick winners or worry about bad news on one stock, because the strong ones lift the weak ones over time. The market, on average, goes up, and you grow with it. Here's the main difference. With individual stocks, your returns depend on your skill and timing. With index funds, your returns depend on the market itself. And history shows the market has been a great long-term wealth builder. But here's the truth. It doesn't have to be one or the other. Many smart investors do both. They put most of their money, maybe 70 or 80%, into index funds for long-term growth and stability. Then use a smaller portion, maybe 20 or 30%, to pick individual stocks they believe in. That way, they get the best of both worlds, steady compounding and a chance for higher returns. So, if you're new to investing or don't have time to analyze companies, start with an index fund. If you enjoy researching, learning about businesses, and you can handle the ups and downs, add some individual stocks to your portfolio. The key is, understand what you're doing, stay patient, and think long-term. That's how wealth is built, not overnight, but over years of smart, consistent investing. Thanks for watching. If you found this helpful, make sure to like, subscribe, and share it with someone who's still confused between stocks and index funds. See you in the next video.